We are facing major structural changes related to aging, digitalization, the greening of the economy. And with all that, we have to deliver on our mission, price stability. So if you're interested in those issues, come to the ECB forum in Sintra. We will debate all that and more.
Welcome back after lunch. I'm delighted to announce one of the highlights of the ECB's Sintra Forum, our policy panel. The world economy is undergoing a period of rapid and intense change. The questions of our next panel, the questions for our next panel will cover what these fundamental shifts mean for the future of monetary policy, and we are honoured to have an exceptional lineup of officials to answer them. We are also honoured to have Francine Lacroix, anchor and editor-at-large at Bloomberg Television, to be guiding the conversation. Francine, the floor is yours.
Hello, everyone. Claire, thank you so much for that introduction. What can I say? We have 1 hour and there's a lot to discuss. So welcome to the policy panel, Sintra 2025. Now, from tariff-related trade ructions to oil price gyrations, caused by also Middle East hostilities, there are many questions on, first of all, how to handle the fallout from some of the political decisions, but much more how the economy behaves. Now, 1 year on since the last Sintra panel, and of course halfway through 2025, global policy needs to navigate risks posed both to inflation and growth, a challenge highlighted by the Bank for International Settlements in a report this week. So let's get started. We have 1 hour. Kazuo Ueda, Governor, Bank of Japan. Of course, our host, Christine Lagarde, of the European Central Bank President. We have Jay Powell, Chair, Board of Governors of the Federal Reserve System. We have Chang Yong-ri, Governor, Bank of Korea, and then Andrew Bailey, Governor for the Bank of England. Madame Lagarde, let's start with you as our host. So first of all, thank you so much for having us all here. We had a little bit of data today, this morning, consumer prices rising some 2% from a year ago, up from May's 1.9%. But then the tariffs still loom large. So how do you see that developing?
Well, first of all, I would note that we are at 2%. And this is the latest reading. This is also the target that we have had, and this is the projection that our staff is indicating for the medium term, which is exactly what we had anticipated. So I'm not saying mission accomplished, but I say target reached, okay? And I think we should start by recognizing that. We faced a massive amount of shocks, compounded shocks occasionally, and we are now through that disinflationary process that we have conducted over the last 2 years. And yes, we are facing a lot of uncertainty. Yes, we are facing the risk of fragmentation increasing. And yes, we are facing geopolitical developments that are worrying generally, but that also are causing two-side risk to inflation. So we have to continue to be extremely vigilant. We have to continue to be committed to delivering on our target. And I think we are at this point in time in a very good position to do that. So we are well equipped to navigate the tormented waters that we should anticipate.
Chair Powell, tariffs are not yet showing up in inflation. Is this forcing you or your staff to actually rethink what the models say about how much the tariffs will ultimately thread through some of the final prices?
So thank you, Francine, and Christine, thank you to you and your colleagues for putting on another great conference here today. It's been a pleasure. I guess I would start, if I may, by saying that the U.S. economy is in a pretty good position. Inflation has come down close to 2%. We're at 2.3 headline, 2.7 core. The unemployment rate is at 4.2%, so we're healthy overall. If you ignore the tariffs for a second, inflation is behaving pretty much exactly as we have expected and hoped that it would. We haven't seen effects much yet from tariffs, and we didn't expect to by now. We've always said that the timing, amount, and persistence of the inflation would be highly uncertain, and it's certainly improved that. So We're watching. We expect to see over the summer some readings, higher readings, but we're prepared to learn that it can be higher or lower or later or sooner than we'd expected.
But, Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now, we're waiting.
Governor Rhee, I mean, South Korea's economy is, of course, highly reliant on trade. Putting aside the deals that each government can strike with the Trump administration, what can central banks, in your position, do to shield economies from the impact of trade tariffs?
Actually, about the tariffs' impact on inflation, our current inflation is well stabilized around 2%, and we believe tariff tends to be deflationary rather than inflationary for three reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China, and recently export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
So what does that mean you'll do going forward?
Yeah, actually, we have been in an easing cycle, and we cut our interest rate 100 BP from last October, and we will continue to be in an easing cycle given our growth rate. But recently, financial stability risk has been rising, especially housing price in metropolitan area is increasing very fast. So we are keeping an eye on this financial stability risk in deciding the pace and the timing of the further cuts.
Governor Bailey, you've taken the view that the latest rises in inflation in the UK will be transitory. Why are you so confident that inflation will fall back?
Actually, you may have detected I've tried to avoid using the transitory word because of this. Oddly enough, it has a bit of a history. But to be serious, obviously any increase in inflation is an increase in inflation, sorry to state the obvious. The reasons it's gone up is really entirely due to so-called administered prices. Now, as I say, that's an increase in prices, don't get me wrong. But it's not telling us much or anything about the context of the economy. In other words, it's not telling us anything really much about the balance of supply and demand in the economy. So I think the key judgment for us is, are we going to get second-round effects from this this pickup? And of course, it's nothing like the pickup of a few years ago, just to be clear. And my judgment is at the moment is that the context is different, that we do see evidence. I see some signs of softening in the economy, I see signs of softening in the labour market. We are going to have to see those come through, though. I mean, come through into prices. I think we've still got to see the evidence and prices. But that background context allows certainly me to say, look, I think the direction of interest rates continues to be downwards.
When you look at all of the uncertainty, again, it's a bold call given what happened to oil prices and trade negotiations?
It is. I mean, I would say two things on that. One, I think as others have said, it's probably, Jay was saying, I think it's a bit too soon, I think, really to see the price effects coming through from the trade and tariffs action. We've made a point of saying also that, I think as Christine was saying, that these are two-sided. They could go either way. Could be weaker demand. We could see supply chain disruption. And the second thing, of course, is that some of these effects, if you take the oil price story, it's gone up, it's come down, all since our last meeting, effectively. So, we always reach for the lexicon at this point. I mean, we've added unpredictability to uncertainty. I was slightly amused at the introductory film this morning with Christine saying all these words, because it's true. Because not only are we getting uncertainty in the sense, the range of outcomes, but unpredictable in the sense that if you get things like, the tariff action, history really isn't a particularly good guide to that, actually. You can't really draw much from the past on that.
Now, Governor Ueda, you're in a slightly different situation, right? Japan's CPI has stayed above 2% for 3 years now.